All right, so I haven't met face-to-face Dr. Keith, but I did meet his tools probably November, December. I think my son got married in December. I don't think, I know. And I think that's when I first met Dr. K. And let me just pull up his website. He does a lot of YouTube videos. And many of you know that I am a fan of Seasonality. I probably have bought all the expensive programs in the market for Seasonality, and finding somebody that would actually do Seasonality and plot it in TradeStation and Thinkorswim and in RadarScreen and MarketWatch and in TradeStation where I could actually scan for it, that was a wow. And then he's taken some Laguerre RSI and stochastics, and he's, quote, made him his own with some modifications and made scanning there. And now he's got a way of scanning and finding entities that are attractive from both a technical and a seasonality standpoint at the same time. So I am going to set up the mic to start. My recording's running, but I'm going to set up the Zoom backup recording, and I am going to go ahead and I am going to make Dr. Keith the presenter in about a minute before we need to start. So let me pause my. I listened to his webinar, I bought his tools, and I use them in both TradeStation and Thinkorswim, and you'll get to see what I do. After he finishes, I'll go through how I put this all together. So give me a sec. Yes.
Perfect.
All right, I'm going to mute mine, and it's all you.
Okay. Okay, you should be able to see my slides here. Let's get moving on. So again, thanks again, Jeff, for the opportunity. I was really glad to meet you virtually as well, back last year. And, seasonality is truly how I trade. And what I've found over the last 15 years is that there's a lot of different ways to trade, right? Can somebody just type in, can you see my screen okay and hear me okay? I just want to make sure. Okay, thank you. So, seasonality is something that when I was first introduced to it, over a decade ago, it truly amazed me. And so I've made it my life work. Having a PhD in finance, initially, universities I worked for, basically my job was to teach students at the university level, and I was able to do research, based off of that. So I was able to spend a lot of money on the university's expense to find out, what works, what doesn't, fail again, and then keep trying. And so what I'm going to do today, again, I appreciate everybody's time on a holiday weekend. I'm going to keep it very basic, because if you like what you see, obviously you can go to my website, you can reach out to me with a lot more information. I'm not going to show you everything I have. There's just not enough time, nor do I want to, because you've already had a tremendous amount of information between Cigar and John with some great stuff there. As we get started, though, just please remember, we all put these up there. It is important to know you should never trade with money you can't afford to lose, right? And again, we all make a point of this because none of us want you to do that. Nothing's guaranteed, especially in trading. If you're trading to pay your rent, even from a mental standpoint, you're going to struggle more versus if it's money that you can afford to lose. So full disclosure, I do have my PhD in finance. I am not registered financial advisor, nor do I want to be. All right, so today's agenda, I'm going to talk about just real briefly, because I know most of you know what seasonality is. Briefly on 2 slides, I'm going to talk about seasonality, and then I'm going to show you one of my tools that was developed a few months ago, and it's available for TradeStation and for Thinkorswim, that I think no matter how you trade, you know, is something that could be extremely valuable to you. And to Jeff's point, you know, Jeff has some phenomenal tools he's using, and seasonality is just part of how he trades, okay? And so I'm not out here to show you my specific system that you have to trade this way to be successful, but if you know the logic behind seasonality, you're going to be more successful, okay? Just some general information, big picture here. If you have questions, you can always reach out at support@seasonaltraderpro.com. And again, this will be out with the recording with Jeff, my Facebook page. You can text us, and there is a link to my YouTube. I do Wednesday webinars. They're free to the public, where I talk about an overview of analysis of stocks, futures, and Forex. Certainly, I focus on stocks more than anything, as that tends to be a lot of the followers. But again, there's a free registration link there as well, if anybody's interested. So seasonality, the way I define it, is a characteristic of a time series which the data experiences regular and predictable changes, okay? So basically any predictable change or pattern in a time series that repeats year over year. And why is that important? If it continues to repeat year after year, it's because the institutions, the big funds, okay, they're the ones buying, in this case, if we're going to talk long plays, okay? They get into particular patterns of habit. And again, I've done a lot of research on this. Even though the data speaks for itself, you know, again, I was curious on why that is. And I've talked to several hedge funds, you know, several big traders. And what I found is when it works for them year over year, they tend to do that, okay? And so when we see these likelihoods and some of these probabilities, it's absolutely incredible not to take advantage of it. So as a trader, knowing the probability of a future move with any stock should be part of your trading routine. And other speakers have mentioned that between Cigar and John is, you know, if you're looking to go long on a particular stock and it's during that quote unquote seasonal window, okay, you're giving yourself a much higher probability there, okay? And let me explain. So bonds, okay, and for example, one ETF of bonds is TLT, okay? If you look to go long around the start of June through July, it's been higher in price 33 out of the last 41 years, okay? So again, think of that. Is that really a good strategy for you to try to short bonds June and July as a swing trader? It doesn't mean you can't make money, right? But wouldn't you rather look on the long side knowing that over 80% of the time over the last 41 years, bonds goes higher? This was 2019, okay? Where I have the red line started, it was where I got my trigger long, which is July 15th. So again, I don't just go in at the beginning of June. I wait for a specific trigger. You're all going to have your triggers. You know, I'll talk about mine briefly today. But, you know, this was a predictable pattern, okay? And this was on the ZB, but the TLT will look identical, just with gaps, because it's the ETF. If you look at 2020, and I'll show you that when we go to live charts here in just a couple minutes. You're going to like the results there as well, okay? So just knowing those likelihoods, high probability likelihoods, can make you lots of money. One of my favorite trades year over year is, again, right around December through March, going long on gold, okay? Again, when I say going long on gold, there's a lot of ways to go long on gold, right? Because again, I also trade futures and Forex. But today we're focusing on stocks and options. So, you know, GLD would be a good opportunity for you to make money, okay? So one of the things I'm going to show you today, again, I don't want to overburden you with a bunch of information today. I want you to come out with one main takeaway. One of the tools that I have is what we call a seasonal script for Thinkorswim, a RadarScreen for TradeStation. That basically I have created a seasonal indicator, and based on my indicator, it'll give you data based on the next 20, 40, and 60 days out, what percent move it has or doesn't have, okay? And that's what we're going to review in live charts here in just a minute. For Thinkorswim, I show it at having a SIG of an 8% move. So you can sort, you can put in, the stocks that you like to trade, your watch list, and you can sort by this significance. And when it shows up a green or a red, it's telling you that there's a significant move coming based on the last 12 years of the seasonal data, okay? And you can create watch lists and so forth. So again, let's take a look here. This is just an example before we get to live charts, okay? So this is an example where right here, you're going to see the SIG. This is significance, okay? I have it SIG. So if you have a minus 1.0, what that's telling you is over the next 20, 40, or 60 trading days, historically, and again, this is old data, so don't think, okay, the VIX, this is old data. I just wanted to prove a point here before we go on the live chart, that over the next 20 trading days, the VIX has fallen 7%, over the next 40, an average of 11%, and the next 60, an average of, let's say 4% there, 3.92, okay? Adobe at the time of this screenshot. A 1.0 means you've got at least an 8% move coming between the next 20, 40, or 60 trading days. So in this case, the 8% move is the 40 days out and the 60 days out, okay? So again, if you're a Adobe trader and you have this information in front of you, okay? And again, obviously this updates every day in the watch list or the script. As you go to take trades, you have your own triggers. If you know there's normally a 9.28% move on that stock, that underlying during the next 40 trading days, okay, why would you want to short that, in my opinion? Okay, why would you want to short that? You want to look for long plays during that time frame, okay? An example here of CBRE, okay? Over the next 20 days, it has a 9% move. Again, this is old data. I should have probably gave you a more recent one just so that you don't get confused. But over the next 40 days, it had a 20% move on that stock. And over the next 60 days, it's 16.68%, okay? And again, this is based off my seasonal indicator, and it's 12 years of seasonal data, okay? So my favorite way, based off of this, and we'll go to live charts here right after this, is I love to use the Laguerre RSI. As Jeff had mentioned, I have found it to be, I've gone through several momentum indicators over the years. The last 3 years, the Laguerre RSI has been the best for me. I just minorly tweaked it and I created a RadarScreen. And what I can tell you is when you have a seasonal move coming, and you wait for that Laguerre trigger, you're giving yourself just an enormous chance to make money, okay? So let's go into some live charts here. So I'm going to first show Thinkorswim, and I'm going to go back and forth between Thinkorswim and TradeStation. And let me explain. So you can have any watch list you want here, okay? So right here, I'm going to keep it simple today with the S&P 100 and Thinkorswim. Okay, so all I did was you click on significance. Okay, so remember by definition, let me just expand this for a minute. What this is telling you is over the next 20, 40, or 60 trading days, because it's got a green 1.0, we've got an 8% move coming. It happens to be 40 days out right here, 60 days out right here, and a UNH 60 days out. You see that? So what am I looking for, during that time frame? Okay, what I'm looking for is a trigger. Specific trigger I use is Laguerre RSI. Okay. Now, the other thing to point out here, when you have that type of data, you can also on Thinkorswim, you can sort by 20 days. So let's say you wanted to be short, okay? Some of you think that we're topping in the markets and you want to look for short plays. You can sort by 20, 40, or 60. So in this case, let's say what you're looking for is the largest move over the next 60 days, okay? So if you sort by 60, the biggest move down based on the S&P 100 from the last 12 years of seasonal would be IBM, okay? So you can click on IBM. And again, I have a seasonal chart to the right. I'm not going to show right now. But basically, if you're looking for a short play on IBM, would be a good opportunity based on the last historical, okay, of the last 12 years of seasonal data. And if you have any questions, feel free to type them in, and I will pause if needed, okay? Now, in saying that, where's my trigger? Let me put it up here. Okay. So if I'm looking for long plays, here's what I'm looking for. In fact, let me sort by SIG again. Okay, the Laguerre RSI, as I mentioned, to me, it's just a phenomenal trigger point. So what I look for is green with green. So in this case, you've got a UNH that has a 1.0, meaning an 8% move or greater is coming over one of these 3 periods or more, or all of them, okay? So here is the long trigger on UNH, okay? This was on, we triggered long here on 9/2, okay? So that was meeting the criteria here if you're looking for long plays strictly on that. Okay, if you're looking for short plays, what you look for is a minus 1.0 with the Laguerre short, okay? And again, I don't want to focus a lot on just the Laguerre because you are going to have, maybe you do like this and will want it, but others will have their own, you might use MACD, as your trigger point. The bottom line is, you can use anything you want as a trigger point, knowing that the seasonal direction is going to be long or short with high probabilities. Okay, that's really what we're looking for, right? So let me show you TradeStation. I know a lot of you use TradeStation as well. So here's an example. Again, I put the NASDAQ on here just to mix it up a little bit, okay? So with TradeStation, kind of the cool thing about TradeStation is this. Input 1, you can adjust. I have this at 20 days. Oh, let me change the color. So I have this at 20 days, 40 at input 2, and input 3 is 60, okay? So it mirrors Thinkorswim. But all you have to do is right click and you can change the input. So if you're looking for, 30, 60, 90 days or 40, 80, 120, you can adjust those settings in TradeStation, okay? To me, which is phenomenal to be able to do that. Okay. Well, again, let me explain this. So let's say you're looking for the next 20 days, the biggest move coming from a seasonal standpoint on the NASDAQ stocks. Okay. I'm going to click on input 1 so we get to the positives. Okay. And there you have it. So typically there's a 3.41% move on AMD coming. Okay. 3.41%. But then we've got, after that, we tend to look for short. So if I was going to do a long play on this, I'd be very cautious, right? I'd be very cautious knowing then after that it turns around and goes in the opposite direction. So I would actually like something better like ALXN, because here you have a 3% move coming over the next 20 days, a 4.64% move coming over the next 60 days, or 40 days, sorry, and then 4.64 as well. And you're like, why are these equal? Because this is calculating at the peak, and the peak happens to be 40 and 60 days out there, okay? So does that mean, again, I just go long? No. So what I do then, I like to short. This is the Laguerre trigger we were talking about in Thinkorswim. So every day I'll look for long triggers that match. So I kept it very simple for myself. If you get a long trigger here, it's green, you want green. Okay, let's say we were looking for shorts. So would I take this short trigger based on my rules on Apple? Okay, let me bring up Apple right now. So there's a short trigger on Apple on the Laguerre, which is showing you right here on this arrow. Okay, but the next 20, 40, and 60 days are green. So I'm ignoring that. Okay, I'm ignoring that short trigger on the Laguerre. What I'm looking for if I want to short is something like CTS8, CTXS, right? Because you get a short trigger on the Laguerre, and then you know, okay, almost a 2% move on the stock itself over the next 20 days, a 5% move down, and a 5.43% move down over the next 40 and 60 days. So I like those triggers much better based off of that seasonal data, okay? So again, you can add up to 1,000 stocks on your radar list, and that's what I do. And then what I do is I sort by either 20-day moves coming or by trigger. My actual trigger here is that Laguerre trigger, okay? And that's how I've been able to catch some really big moves year over year, because again, you're giving yourself that directional bias, okay? And some of these stocks throughout the year have 20% moves coming, folks. And when you know that and you're just patient and you wait for a trigger, okay? You know, again, everyone likes Apple, to look at Apple, okay? Well, this has been, seasonally has been long as well. So when do you get in? You know, a good entry point was right at the Laguerre trigger here, right? Or back here, because Apple is one of those crazy stocks that seasonally speaking, it's long more. It's got a seasonal long, you know, many, many months out of the year. So if you know that, you get these beautiful pullbacks. Okay, I'm not looking to short Apple right now. Okay, I want to go long on Apple again with a trigger. Again, I don't have a trigger long just yet. Okay. The other cool thing is, let me just go back to Thinkorswim now. You know, let's say you're somebody that you have a watch list, but you also want to, let me just do, let's say you want, okay, I want to know what is the seasonal coming up on Ford Motor Company, okay? So I just typed in the symbol F there. You can see what it shows you. Over the next 20 days, it basically has, you know, a small move down, but pretty flat, right? Minus 0.73. But then it says over the next 40 days, it's got a 4% move, and over the next 60 days, a 4.31. So what a lot of traders do, again, I'm a seasonal nut. All my trades are using seasonality, but you maybe you like something and you just want to know, hey, I want to go long on, let's say you want to go long on, let me pick one, Lulu, right? We were talking about Lulu earlier. So when you look at it seasonally, you can see that historically over the next 20 trading days, Lulu actually heads lower 3.65%, okay? So if I was going to go look to buy Lulu as a longer term, you can see it then continues. Let me click on this to show you, okay? You can see that over the next 60 days, it has a 5% move, okay? So what I like to see is confluence between the three 20, 40, and 60. If I get, you know, positive, 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 then those are my favorite trades versus a mixture, okay? Unless you're doing a shorter term option play or buying the stock shorter term. But I like to have everything in confluence, because with all of the stocks out there, you know, why not, right? You might as well make it happen. Okay, and I thought it was interesting. Let me bring up WBS. Okay, this is something the guy was talking about. Okay, so again, if I type in WBS, you can see, you know, he was looking as a potential good long play. You can see over the next 20 trading days is positive, 40 trading days at 4.5% move, and then 60 trading days 5.6% move. Okay, so you can see, you know, I agree. If you're using this type of data and you're looking to get another simple process to say, okay, you know, I'm seeing a long play now from a seasonal data standpoint. What are your thoughts? Yeah, it should head higher, right? Okay, one thing I just want to show you. We're not going to spend a lot of time because I really wanted to focus on the radar screen here today. But when I'm talking about that, okay, I like to use it in conjunction with my seasonal indicator. Okay, Now, this is off of a weekly chart. Okay, this is daily, where my triggers are, right? Where my triggers are. And then this is weekly. So how do I use this? Well, in WBS, you can see this red dotted line is as of right now. So you can see it's forecasted to go higher. What percent? Well, you saw that over here, right? But where this can be really, really handy for options is this. You can see it typically peaks right around February, okay? So if you were looking to maximize this potential move on WBS, you could have a February, March expiration expecting this move up, okay? The other thing that my seasonal indicator does, which is a huge part, and John mentioned this, seasonality works in a normal environment of that stock the best, okay? So what I have is this white line is what should have been happening back in time, okay? So back from June, the week of June 8th all the way to 8/31, this is the white line of what should have been happening, okay? And then you can determine, so we should have been heading lower, and we did head lower on WBS, okay? And if you have to turn your head sideways, it's close enough. But what we look for is, let's say that the white line was forecasting straight up and price on an underline went straight down. What that's telling you is this year, that stock is not acting normal, okay? If it's not acting normal, there's more risk in the trade. I would pass on it this year, okay? In my opinion, with WBS, is acting fairly normal. There's nothing there, in my opinion, that is saying it's, you know, it's much weaker than what it should be. So as a WBS, you know, the trigger happened right here on 9/1. We got the nice seasonal move. I think it's a fantastic opportunity. Okay, that's how I use this type of trading system. But again, I didn't want to focus too much in one. That's why I was talking more about the 20, 40, 60 will give you the next, you know, 60 trading days, which is 90, you know, 3 months of the calendar. Okay, let me bring up the slides one more time here. Okay. Okay, we also talked about, John brought up, I just typed it in there, remember, XLF. Okay, so let's take a look at XLF as a potential bullish, right? You can see from a 20, 40, 60 is positive, you know, in the sector. And you can see the red line here, you know, between now, we typically top right around February on financials as well, okay? So again, where this white line comes in really handy is what this is saying is basically since mid-July, you know, normally financials will head a little bit lower. It's been heading up pretty much. So this year, financials are a little bit stronger though over the last 12 weeks anyway than what they historically are. So that's bullish. I'll go in that direction. But if price would have been much, much weaker in an up move, that's when I'll, you know, just cancel, not trade it this year, wait for the next opportunity. Okay. So anything you want to look at within seconds, you can find out what the seasonal movement is. Okay. If you're looking at something like Netflix, right? You know, Netflix, there's actually good times and better times to trade Netflix. So if you look at it from this standpoint, you can see it's pretty positive right now, right? 3.37% over the next 20 days. Over the next 40 days, 5%. Over the next 60 days, 7%. So, and you can see it showing here. Look at the January Netflix trade, folks, okay? Right here. If you're looking at buying some more Netflix, big time is right at the beginning of each year, okay? But where this can be helpful is we had, you know, obviously a 2 to 3 day down move here on Netflix. This wick tells me a lot of buyers came in, right? But you know, if you want to buy Netflix and maybe have an expiration of February again, right? This might be your good buy point with a trigger, right? I don't have a trigger. The trigger happened back here on 8/19. So I'm going to wait for a new Laguerre trigger before I get back into Netflix. But you can see why I like it only long at this point, okay? Now, if you want to be more aggressive, on the Laguerre, you can always go to a 4-hour chart, okay? And so you can see here on the 4-hour, no trigger yet. What a trigger means, to clarify, is when the blue line here closes above this green line, okay? So it's got to go like this. But if that happens on Tuesday or Wednesday, there's my new entry long on Netflix, okay? And again, everything shows up in the radar screen. You can do a quick sort in the morning or in the evening, and you're good to go on your opportunities. Okay? Okay, so there's two specials I'm giving today. I just want to talk about them briefly. And then if anybody wants me I have time for a couple symbols. If you want to type them in, I'll show you the seasonal, if there is a seasonal advantage coming up. But the special one is for Thinkorswim. Okay, the prices are going to be the same for Thinkorswim or TradeStation, but the first one is a special one where you're going to get that Watchlist scan and the Laguerre with scanner. Okay, you're going to get it 20% off for $678. And if you purchase within the next 2 days, you can set up an appointment with me. We'll share screen and a one-on-one. Okay, where I'll show you again how exactly I use that on a more personalized level. Okay, and again, just to kind of go back, what that is you would get this 20, 40, 60 and the Laguerre trigger. Okay, right here. Okay. And the Laguerre right here. These are just standard Bollinger Bands. Okay, the only thing that's not included is my weekly seasonal here. But you get the 20, 40, 60 and the Laguerre trigger. Special 2, this is the TradeStation. So it's basically getting the 20, 40, 60 radar screen with the Laguerre. So it's the same. Here, let me put these in. Let me put that in the chat for you. So this is toss. And I know Jeff will be sending this out as well. One of the questions I get a lot too is if you have both. Well, I know a lot of users have both. If you don't want to purchase both, and I had to pick one, it's tough because I mean I've been using Thinkorswim forever, but the benefit of TradeStation, let me just show you. You can change these inputs like I mentioned, right? So let's say you're looking for a longer play. Okay, I can go into, and instead of for 20 days out, I could say, okay, I want to do 30, 60, and I want to look some for even longer, let's say 120 days, okay? And you can change how many seasons you want. I did 10 years on this case for TradeStation, okay? So these are recalculating, see that? So now what I can do is resort, let's do input 3, which is that 120 days. Let's look at long plays. So NVIDIA, which is was my pick of the year, okay? NVIDIA between now and the next 120 days has a forecasted move of 21%, okay? So is this a pullback to get a better entry? Again, I'm still going to wait for a Laguerre trigger, okay? We got a short trigger I'm going to ignore. I want that Laguerre to head back up or even curve like it did here. But if somebody said, Dr. Keith, based on, again, this is just a smaller watch list, right, of the NASDAQ. You can put in 1,000 stocks here, okay? 21% move based off of that. Or let's say you want to go short, okay? You've got DXCM has a short trigger, a 13%, almost a 13% move down coming from the last 10 years of seasonality. Okay, so that's one of the advantages with the TradeStation is you can, based on your trading, you can go a year out, you can go 10 days, based on your trading style, you can adjust these settings and get that data. And then again, what I do is I just look for the triggers. So AMAT, has a long trigger on the Laguerre. That's what this is right here. Okay, you can see it right here. So we got a long trigger with a pretty good move coming over the next input 1 and input 2 again, which you get to adjust yourself, right? So again, if I go in there, you look at it. So you got a 5.75% move coming over the next 60 trading days on AMAT. Okay, so is this a good entry for you? Plus we're in this beautiful uptrend? Possibly, right? By rule, I got a long trigger. Now is my time to enter. Okay. Okay, let me just make sure I've covered everything there. Okay, does anybody, again, if anybody wanted me to look at something here, I got about 5 minutes, or answer any questions, or if you want to look at a particular stock, just tell me which stock and which platform, and we can plug it in. If not, I'll give over rights back to Jeff and we'll get moving. But, you know, check out my website. You know, definitely you should register for those free webinars on Wednesdays where I talk about market analysis. And again, it's all based off of seasonality and big moves coming. You know, for example, the next 2 weeks is very interesting, right? We keep hitting new highs in the markets, and then we have this 2 or 3 day retracement. The next 2 weeks are historically bullish, okay? Pretty bullish over the next 2 weeks. So do I think we're going to continue higher? I do. There's a few other reasons. We've got Forex. In the Forex market, retailers are still more net short than long the markets, which is a bullish signal. So I still think we're heading higher. I'm only looking for long plays, and how I'm looking for it is based off of the, you know, the highest probability seasonals, you know, when I get triggers. Okay. All right. So yeah, sure. Let's look at Tesla. Okay. So Tesla, by the way, you know, that's bullish there. It hits the middle Bollinger Band in that. But if I type in Tesla, TSLA, you can see here that what it's telling you is NAND means there's no significant move coming on Tesla from a seasonal standpoint right now, okay? So if you get a trigger or you like the price, you can take it, but you're not seeing an advantage over the next 20, 40, or 60 days from a seasonal, okay? ROST, it's another one. Somebody asked about. So again, ROST right here. You've got an advantage coming to the long side on ROST, okay? So if you're looking for anything, we had a Laguerre trigger right here with that seasonal influence to the upside. That's a good trade, right? Again, just to show you what I love about ROST, if I was going to do an option play, you know, this is where I would have it expire, or here, depending on what you can afford, right? Because the further you go out, the more money. But this is a great trade long. You know, this trigger here, which is beautiful. My guess it'll hit up to that 104 level, okay? So you have to have at least 5 years of data, but I don't even look at 5 years of data for seasonality. The question was, you know, what if it's something new? Because, I mean, seasonal data is exactly that. It's past performance movements, okay? So I defaulted to 10 years because I don't really want a focus on something that hasn't been proven, okay? Now, you can go 5 years or less, but, you know, the least you go, the more. You know, one of my packages here, I'll just show you on TradeStation. I compare over here the 5 and the 10 year, okay? So the red is the 5, the blue is the 10, or I'm sorry, the red is the 10, the blue is the 5. So you can see the dotted line, these forecasts here, okay? And if, as long as they're looking pretty similar, then that's definitely something that I'm good with, okay? So, but something that hasn't been around that long isn't going to give you that advantage versus, some stocks have made money during a certain window 40 out of 42 years. It's crazy. Okay, so let me just show you one more thing and then I'll hand it over to Jeff. So we talked about bonds this year. Let me bring up the TLT. So in what I'm looking for at the start of June, I'm looking for long plays. Okay, I'm not going to take it though until I get a trigger. So right here is my trigger point. Okay, right here. Okay, so then you can see the nice bond move up. Okay, why is that? I'm sure there's a lot of reasons for it, but my answer is this, because that's what it does that time of year. Remember, we went last year as well. Okay, let me go back a little bit further just to show you. So now if I go to June of last year, okay, where's the trigger point? Right here. I had to wait until July 18th. Okay, that's what I love about the Laguerre. And then bam, bam. Okay, so if you have that seasonality in front of you, you're just giving yourself a directional bias in the highest probability trades. Okay, so again, visit my website, reach out with any questions. I have a lot of tutorials on a lot of the other seasonality and that. Again, I go over all of this every Wednesday. So, it's something that you can get extremely used to. Hopefully it'll help you with your trading. Again, I only use seasonality in my trading or I don't take it. That's not what I'm saying everybody has to do. But as you saw the example, like with WBS, with cigar, how awesome that was, that then it corresponds with the seasonal move, right? In my opinion, those are the best, of the best trades, okay? All right, let me give it back now to Jeff. Bear with me one second.
All right, we've passed the ball. I am now the host, so let me share.
All right, Jeff, all yours.
All right, thanks, Keith. That was great, and I hope everybody's enjoying this. Just a very quick reminder that I will be sending something out after the program today with all the links for everybody, but Dr. K has a special offer. I'll send this out with the links later, and you'll be able to copy and paste the links if you want. We have one more section left, and it's a section that I'm going to kind of show you how I put all these tools together. And there's a lot of people still here. I'm thrilled to see that. Again, thanks to all my speakers. They all did a great job. I knew they would. That's why I invited them. And, the little secret is, as I said before, I learned from these as well. That's why I do these programs. Since I don't sell you anything and I don't take affiliate fees, there's no money in it for me. But I do use the tools. I love them. And I am showing 112. Let's take a 3-minute minimum bathroom break. I'll try not to say anything silly when my mic is on. I've been known to do that. And then we'll start back up at 1:15. I will go to 2 o'clock. I will answer your questions and review the offers that we have. So thanks Dr. K. Thanks, John Person. Thanks, Sagar. Thanks, all of you, for sharing your time with me. And let's take a short break. I will be back in about 3 minutes. Thanks, everybody.